Welcome to the Transparent FX Academy. In this video, I'll speak about USDCHF. As usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which has just broken to the downside a quite strong historical monthly structured zone. In fact, what we know is that this area here, for more than 1 year, it has been acting as strong monthly demand and support. From here, this previous rejection to the upside was created. Again, here, when the market reached the exact same level, again, strong buying pressure presented itself, possibly from an institutional perspective. We will speak about this in just a few moments when we move to the commitment of traders to see what institutions are doing on the CHF. And fueled by all that institutional longing, the market rejected to the upside, and then finally, with this big impulse to the downside, broke below the support. And what we know is that a previous level of support, especially such a strong historical structured zone, after it is broken to the downside, what you would expect is for the market to want to go and retest its zone. We have seen this in the market over and over again. Once a strong level of structure is broken, the market usually is attracted to the area for a retest. Now, we can see that, for example, in the past, the easiest example is right here, this area here. It was first acting as previous resistance. The market broke it to the upside, retested it as support, broke it to the downside, retested it as resistance. The exact same scenario could play out here with the market wanting to go and retest this exact same zone. Now, let's keep that in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear. What we can notice is that this zone was acting as previous weekly support from which both these rejections to the upside were created. Now the market broke below the level. So this previous support is now turned resistance here. So we have a very close level of resistance that this market seems to be attracted towards, and from which there is the possibility of seeing some more bearish continuation, or at least to see a short-term reaction to the area for the market to essentially find some sellers inside of this zone. Essentially, and especially if we are already seeing institutional shorting of USDCHF, which we will now go and check out in just a few moments. But for now, let's keep all of this in mind and drop down on the daily time frame. Now, here on the daily, I did speak about USDCHF just a few days ago after the creation of this overextended M pattern. I explained all the reasons for which after this overextended M pattern, I was expecting a rejection to the upside. And that is a very common pattern in the market. When you see an overextended M, you expect the market to create a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. And in this case, that is exactly what the market did. The market went and retraced more than the 0.32 of the Fibonacci taken on this impulse leg. We are now around the 50% retracement area. So clearly, in a situation like this, we are getting the completion of the M pattern, which is actually already completed. And the market seems to be arriving inside of that supply and resistance zone that we have previously identified on the weekly time frame, inside of which there is a possibility to see institutional shorting of USDCHF in the market to show a reaction to that zone. If we go and see, in fact, what is going on by looking at the commitment of traders, so what the big players in the market are doing on the CHF, what we can see is that with the very last reports, net positions haven't really changed. We were at -20, we're now at -22. So overall, if we're looking at what is going on, we just see pretty much net positions remaining unchanged. But if we look in the past, we can see how we were here at minus 42k net positions, we are now at minus 22k net positions. So essentially, we had net positions becoming double as strong from an institutional perspective, and net positions are simply longs minus shorts, which means that shorts got decreased massively from 46k down to 30k, and longs got increased, so doubled from 4k up to 8k. Now keep in mind that if we are looking at the data for the CHF, we're actually already looking at CHF USD. But if we want information on USD CHF, we simply have to reverse it. So if institutions here, in this case, decreasing their shorts on the CHF and increasing their longs, what is going on is that they are expecting USD CHF to get weaker, because by longing the CHF, they are shorting USD CHF. It's pretty simple. If institutions are expecting the CHF to get stronger, they expect USD CHF to get weaker, because all currencies on the spot are traded against USD. So moving back to the chart, this means that if the market here will go and correct back inside of this supply and resistance zone, there is a good probability to see more institutional shorting of USD CHF inside of this area, which essentially means longing of the CHF, as we have just seen. And at that point, there is a good probability to see that reaction to the downside. So if the market will go and test this area, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COD data, these are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, I wouldn't be surprised to see a potential reversal lower away from the supply and resistance zone. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COD data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.